Hey, what's up, everybody? It's Wyatt Graves, your host of the Mint Tea Podcast, and welcome back to another episode of the Mint Tea, where I, as your host, am the Mint Tea, and my guests are the mentors. I invite you to take a ride with me on my journey as a transformational leader, a super connector, and a mentor who is a real estate investor and entrepreneur, a dad, and a husband. I invite you to listen to conversations that I have with other people who are winning in an area that is important to me. And as you will hear in today's episode, taking that leap of faith, reaching out to somebody, having a new conversation, exposes you as it exposed me to new ideas or better choices than those that I already know. Today's guest is my friend Brian Tibbs. He's a fellow Go Bro inside of GoBundance. In today's episode, you will learn from me and Brian a lot of great information, especially if you are young and you are interested in becoming a multimillionaire without becoming an entrepreneur. Specifically, if you want to build a real estate portfolio with one property at a time, we talk about that. We talk about his journey because he's already done it. We talk about a whole lot more. You'll learn more about me, the mission that I'm on, and how you might be able to get involved. And you'll learn about Brian and how you can be involved with his community, his book, and hear his story, right? His story on how he became a multimillionaire by buying one piece of real estate at a time and started with just $2,500. It's possible. And in today's episode, you'll discover exactly how. So I invite you to take a ride, listen along, and I hope that you find value. Let's get into my conversation with Brian. What's up?
Man, living life, loving life. How are you?
I'm doing really good. I just gave blood this morning, which was what I was supposed to do before, like 3 weeks ago. And that was a commitment that I made. And then we had snow in South Louisiana for a week and it shut down everybody. So I couldn't do that. And it's been on my mind. And it's one of those things where I'm just a little obsessed about checking things off of my to-do list. That seems so easy and I want it gone. So this morning I made that appointment and then it took a little longer than I anticipated. But I say all that to say that, you know, optimizing health is important for me. That's one of the key pillars for this year, and it's been a key pillar for many years. And there was a post in GoBundance just recently, like looking for the hack, like what's the silver bullet? I don't know if you saw that.
No, I didn't.
Man, the question that I asked is, well, what's the baseline? Right? Like if you're looking for this drastic change, but if you're already elevated, then I'm not sure that you're going to find a silver bullet that really catapults you in a big way. And I think that's where I am. Like, I'm just so full of energy, gratitude, just all the things, man, I'm winning. So I'm
awesome.
I'm fired up. How about you?
Yeah. On the health front too. I mean, what's the hack? I mean, yeah, there's lots of pills out there you can take and there's surgeries you can have done. But my opinion is it's the little stuff that you do all day, every day. And continuing tracking your metrics and trying to make improvements, that's where it's at. You take a pill, there's other effects and there's other problems. And I think you need to dial it in and you need to work it every day.
That's right. Well, man, so you reached out in GoBundance and said, hey, this is what I'm doing. If my story resonates with you, hit me up. Yeah. I did that a year ago, and then I pressed pause on the podcast and had to go find clarity and figure out who I wanted to talk to, why was I doing this? And in the meantime, I found clarity, relaunched the podcast, saw you made another post. And so it's obviously the right time for us to connect.
Yeah, exactly. Right. Exactly right. Yep. That's right.
So how long have you been in GoBundance?
2022, early 2022, I joined. So I guess this will be my third payments coming up here pretty soon. So
yeah, good deal, man. Good deal. So, and where are you located?
I'm in Phoenix, Arizona.
Phoenix, Arizona. Okay. Were you in Scottsdale at the event?
I was.
Okay. I was too. We should have met up, but we didn't know each other was there, I guess.
Probably passing the halls and
Probably so. Well, awesome, man. I'm excited to hear your story. And I don't know if you know about the Mentee and the purpose of our show and the community that we have, that we're re-engaging, that we've had for many, many years. But the whole premise of the show is that, dude, I'm on the journey.
Mhm.
And over the last year, I have found clarity in the words that describe who I am and what I'm doing. And
Cool.
those words are transformational leader,
Mm.
super connector, and mentor.
Wow, very cool.
I'm a real estate investor and an entrepreneur, but all those words are really what
Yeah.
I have found resonate with me. And so the mentee is me. I'm the mentee, and the guests on my show are mentors,
Oh,
right? And
wow.
so
Okay.
I think that you don't know what you want, you only want what you know. And so
Mm.
my options and my choices, like yours and everybody else's, is limited to what I know. And if I want better choices and bigger options, then it's up to me to go have conversations with new people who are winning in some place that is of interest to me. And I might then be exposed to a better way of doing something, a different way of doing something, or something totally different that I don't even know about. So that's the premise of the show. And then our listeners get to ride on my coattails as I meet new people and have new
Uh,
conversations with people like you. So I'm excited to dive in and hear your story, hear your journey, hear the things that helped you overcome whatever the hurdles were. I think your story's gonna have some of those maybe. And so I'm excited to connect, man.
Man, I love that concept, and just the idea of you bringing your listeners along as mentees as well. Yeah, that's fantastic. Love it.
Yeah. So I'm just a learner. That's the thing, man. I'm an ordinary guy taking risk, living with courage, and doing things that maybe aren't normal, so that I can have a little bit unusual or abnormal life. And here we are.
So good. Yep. Well, I'm right there with you. So
Tell me about it. That's what I want to know. Tell me who you are, where you came from, and all the things.
yeah. So well, the very beginning, I grew up in a family. It was a Christian family, but it was equally an entrepreneurial family. My grandpa, my dad's dad, had his own business, and my dad had his own business, and so that was really kind of ingrained in our family. And I took to that. And I remember as a teenager, recognizing my dad and my grandpa were talking about buying a duplex. That's the first time I'd ever heard of that. And I just thought it was such an absurd idea. Like, why would you guys do that? Why would you buy a house, let a stranger live in it, hope they pay you rent, go and clog their toilets at midnight, have to pay all that interest on that? I just didn't understand it. And they took the challenge to kind of help a self-absorbed teenager understand why they were making this investment. And I was like, you're going to make $50 a month? I mean, what in the world are you talking about? This is crazy. Why would you do this? And they showed me appreciation and debt pay down and depreciation, even on the taxes and all the different benefits. And that opened my eyes. And as a young adult, I realized, all the people that I know that are wealthy own real estate. So I'm going to own real estate. Grandpa and dad did it once. I'm going to do it as well. And that was the extent of my understanding of real estate. And so at the age of 19, I bought my first duplex. I didn't
Nice.
pay rent. I didn't want to even pay my own mortgage. And until 2 years ago, I never did pay my own mortgage. I always house hacked. I always lived in the properties that I was investing in. And yeah, and so that's got me to where I'm at today.
Wow. So how old are you right now?
I am 48 now.
Okay. So that's almost 30 years ago.
Yeah, yeah, yep, exactly. Yep, 20
Dang.
years ago.
And so you started with that first rental, and have you grown that? Is that where your wealth is parked?
Yeah, yeah. So I'm a real estate investor, and when people ask me what I do, I used to fumble around a little bit. It was kind of a hard answer, but yeah, I'm a real estate investor. And it's kind of an interesting story. So at 19, I bought a first duplex. At 20, I bought another duplex. At 21, I bought another duplex, all through creative means. Like I didn't have any money. And so my first duplex I bought with like 3.5% down. Obviously, 30 years ago, real estate was cheaper. And so I had like $2,500 out of pocket. The second duplex I borrowed $10,000 from my grandpa and then paid him back. At the same time, I'm paying the first mortgage. I'm paying him back as well. The third one, I basically worked off the down payment from the seller. And so literally I had 6 units and I only had $2,500 invested.
That's crazy.
A couple of years later, I bought a fourplex. So I'm up to 10 units. and I'm not making any cash flow, but it was 2004, 5, and 6, and so the values of these properties are going crazy, and my life took a dramatic turn. I was going to a church, I was dating this girl, and I felt like God was telling me I was supposed to be a missionary. And I thought that was stupid. Honestly, I thought that was crazy. But I ended up deciding, okay, I'm going to go ahead and give this all up and I'm going to, I don't know, move overseas, I guess. So I did. My wife and I, we got married. My girlfriend and I got married. And sight unseen, we packed 4 suitcases total and flew to Guatemala and started a 16-year journey leading a nonprofit overseas. So we lived in Guatemala, Argentina, Peru, Ecuador, and then our last country was Brazil. So we did
Wow.
it for 16 years. I was the co-founder and the CEO of the nonprofit. And kind of the punchline of that whole story is if you took all of my W-2 income from the nonprofit and divided it by the hours that I worked over those 16 years, I made $9.20 an hour average. And in spite of that, and using obviously the foundation that I had before we left, we built a multi-million-dollar net worth in real estate investing, very much on the side. I was very focused on the nonprofit, but just when I had a little bit of time, I would trade a property, upgrade a property, fix a property, that kind of stuff, add more units. And by the time I was 44, the real estate was able to provide for our family and continue to grow the portfolio. And so our kids were getting older, and we decided, okay, the nonprofit thing is over for us. And so we packed our suitcases and flew back to the U.S. And so that was 4 years ago now. And since then, I've just been focused on growing the portfolio. So that's the snapshot.
Man, I love that. So let's digest that just a little bit. So you didn't get rid of any of the real estate properties whenever you decided to become a missionary. You just kept what you had. True?
No, we actually did sell. At first, I was like, okay, I got to liquidate some of this stuff because we're going to be volunteers. We're not going to have any money, and they're not cash flowing really. And so I sold one of the duplexes, and then I had a guy approach me. And this was late 2005. Property values are just going nuts. And this guy came and offered me twice what I had paid for my fourplex. And I was really conflicted because I'm like, this is my retirement. If I'm going to be in ministry, I know there's no retirement on the back end. I got to keep this building. And a friend of mine said, you're smoking rope, man. You got to sell that thing. He's offering you twice what you paid for it 2 years ago. So I took it. Obviously, that was a great move because everything crashed, like what, 10 months later.
Yeah.
And so I actually paid off the debt on the other units that I still had. And then we just kind of rode that until 2000, I guess it was 2009, after the crash was really settled in. We took that cash and then reinvested it and started to grow the portfolio again. So that timing was perfect.
So you started at 19, because here's where I'm going. One of the things that I'm really interested in, Brian, is making an impact on other people through real estate investing. And what I'm going to say, well, I'll just frame it, right? I'm convinced that there's a curriculum that I can teach that's labeled how to find a job you love, make the money you need, and live the life you want.
Wow.
I know that we're surrounded by a bunch of hard charging entrepreneurs who don't want a W-2. My heart goes to the people that aren't built for that. My heart goes to the people who are W-2 employees.
Yeah.
And I don't think that they should suffer from living the good life because they're not entrepreneurs. I don't think that W-2 employees should not have financial freedom because they chose to work for you or me or some other entrepreneur. So I'm convinced there's a formula, right? And so finding a job that somebody loves, i.e. you were a missionary, right? The job itself may not be the income provider that provides the money they need.
Yeah.
Right. So they don't have to be the same.
Right.
And so in going along with that same vein, right, finding a job you love, making the money you need to live the life you want, it comes down to a financial formula. And I think that it's rooted in real estate, where we can leverage debt and we can leverage tax mitigation and we can leverage appreciation, right? And we can leverage the fact that it's 4 walls and a roof that does the service to the customer and not us, right? So when we're sleeping, our four walls and the roof are still providing the service that the person that's paying for it is asking for, right?
Yep.
Now, the thing though is it's not overnight. It's
Mm-hmm.
not instant. So you started. So I want to digest the
Yep.
numbers part so that we can help create some context to what you did
Yep.
to these people that I hope to reach, right? Who are W-2 employees, maybe making 15 to 20 or $25 an hour in some cases.
Yep.
You started in 19, you bought a duplex. How many units did you grow until you decided to become a missionary?
Yeah, I was at 10. So I had the three duplexes and a fourplex.
So three
And
duplexes and a fourplex.
and I was 27. And so that was just 8 years after I
Okay.
started.
So for 8 years, you climbed the mountain.
Mm-hmm.
And did it feel like you were winning relative to the cash flow that those properties were providing during those 8 years?
No, not from a cash flow standpoint. Obviously, the market has cycles. And during that time in 1996, when I started, markets, real estate prices were pretty flat, rents were really soft, and it just wasn't a great economy, at least in Boise, Idaho, where I was from, and that's where I started to invest. By 2003, 4, 5, and 6 for sure, man, prices just started to go crazy. So even though I wasn't making any money, now granted, I was also living in one of the units, right? So I'm kind of sucking
Sure.
up the cash flow, but I wasn't making any money on cash flow. In fact, there were months where I was feeding the thing. If I had a vacancy or a big repair or something like that, out of my W-2, I was paying for some expenses. But I saw the valuation going up. I saw the loan balances going down. And again, just dumb trust. Like everybody I know invests in real estate, so this has got to work out at some point, right?
Sure.
And so yeah, so no, I didn't feel like I was killing it from a cash flow standpoint for sure.
I think that's key, right? Because there's
Totally.
this world of Instagram and
Yeah.
Facebook, and it's easy to misconstrue that once you buy a real estate property that you get this big raise.
Right.
It's really not true, right? But what happened is you stayed the course for 8 years. And another key attribute, you were buying these properties with little to no money out of
Right.
pocket,
Right.
which is still available today in
Sure.
2025. You find the right deal, you find the right loan, you find the right creative financing structure, and then you can buy properties without a lot of cash out of pocket, right? You may not win in cash flow for the next 3, 5, or 7, or in your case, 8 years.
Yeah.
But when the time is right,
Right.
you were able to cash out. You
Yep.
sold a property. How
Yep.
much did you cash out at that 8 year mark before you took off to the missions?
Yeah. So I mean, on the fourplex, I made 200,000. On the duplex, I made maybe 60. So I'm 20 nothing years old, and I just pocketed $250,000 in 1 year from my real estate investing that wasn't really making money, right? So that was like, oh, holy cow, this can work. Then, like I said, I paid off all my debt, so now I am cash flowing, right? So I'm able to
Right.
pay my expenses overseas just from these few units that I still had, and I had cash in the bank. We call it dry powder, and ready to go when this storm clears. So in 2009, I was a little early because things kept crashing, but in 2009, we started to really reinvest heavily. And now I had my own cash, so it was a little bit less hard to find a way to make it happen. I can refinance the properties that are paid off. I can use the cash that I've got. And so, yeah, that's what got us to the kind of the second phase.
So the first 8 years was a period. Then the
Yep.
next 16 years was a period.
Yes.
So tell me about cash flow and wealth from the limited portfolio and the random upsizing or
Yeah.
trading up over that
Yeah.
16-year period of time. What did that growth look like?
Yeah. So I think it's perfect. What the message that you're sending to the mentees that are listening is really spot on. I love it. And I want to share the story. I want to kind of like follow the thread of that very first duplex that I bought. I was 19 years old. I paid $124,000 for it, lived in one side, rented out the other. Okay. I owned that thing for a total of 19 years, right? That was one that I kept. It's the fun story because I bought it from the builder. It was brand new. So I paid the tippy top price. There was no discounts. That was my sophistication. Like, I don't want to have any problems, so I'm going to buy the perfect building, which of course, new construction, it had problems. But
Sure.
my thought was, I don't want any risk. I don't know what I'm doing. So, and I want something people want to move into, so I don't have to struggle to find tenants, which I still struggle to find tenants. But anyway, owned this thing for 19 years and I never made money. In fact, I may have even fed the thing a little bit in those 19 years from a cash flow standpoint. But I finally got to the point to like, okay, I'm going to sell this building and I'm going to convert this duplex into a fourplex. And that's what I did routinely through those 16 years, right? So this is just one example of that. So I sold it and they slid me a check at closing for over $100,000. So my $2,500 investment didn't make any money for 19 years, turned into $100,000. I took that $100,000 and that was enough for my down payment for a fourplex. I bought that fourplex. I kept it for 3 or 4 years. That fourplex went up in value. I refinanced it. I pulled my $100,000 back out. So now my investment is zero and I still have 25% equity in the building.
Sure.
I sold that, bought another fourplex and a duplex. And if you follow just that thread of it's all, they're all 1031 exchange, right? You follow that thread all the way through. Today, it's 22 units producing $100,000 a year in cash flow, worth multiple millions of dollars. A $2,500 investment from a kid who didn't know what he was doing, 19 years old, just stubborn enough that didn't want to pay a mortgage payment. Right?
That's so good.
And so your mentee's sitting here saying, well, I don't know anything. I didn't know anything. And I remember sitting down there signing the note, the mortgage. You expect me to pay you back $120,000? And, I was terrified. What am I getting myself into? Well, now I know.
Now you know. Dude, and look, we're trying to solve retirement.
Right.
That's the thing. In today's America, we're trying to help understand how people can have a retirement whenever it's time.
Right.
This is such, and I believe this, right? So I'm in the childcare business as well. And I think that that's such a critical industry, a critical segment of our community and our society to invest into the birth to 5 age group, right? To set them up from an emotional standpoint, to be anti-fragile and to be resilient, right?
Yeah.
And to use words to match with emotions and emotional management and behavior modification, all those things, right? But yet the industry pays so little for early childhood professionals.
Right.
So how do we solve that problem? How do we solve for quality early childhood education by having quality childcare providers in the industry who don't have to suffer in their retirement days because they chose to work inside of that profession? And I think that the real estate investing world is part of that. And that's what we want to help to make happen.
Yeah, I always like to tell people, the way to form diamonds, you have to have 2 elements. You have to have time, long periods of time. And you have to have pressure. If you just take a lump of coal and set it on the surface of the earth, there's not enough pressure to create a diamond. So just sitting there forever doesn't do anything. Building wealth is the same. You need time. You have to have a span of time. I know there's a lot of people that talk about pills you can take and tricks you can do and hacks you can. It takes time, okay? Unless you get super lucky, it just takes time. And the pressure element is return on investment. Over long periods of time, if you push to increase and maximize the return on your investment, you will build wealth. It doesn't matter if you're an early education teacher or a missionary making $9.20 an hour or a volunteer. It doesn't matter. Those forces just work over long periods of time.
So the moral of that story is, it reminds me of the best time to plant an oak tree was 100 years ago. Yep. The second best time is today.
Yes.
That's so good.
Yeah.
That's so good.
Because how do you expect to harvest fruit if there's no seed in the ground? And that's the exact same thing with real estate. The earlier you can start. And I like to tell people that that first duplex, it was such a bad move. There was no way to force equity. It wasn't going to cash flow. The mortgage payment was too expensive. It's just such a bad investment. I would never do that investment today. Yet the fruit of the seed of that tree represents almost half of my portfolio and is paying me enough that I don't ever have to work again. Just that thing alone, if I didn't work.
So good. So what does your portfolio look like right now?
So we have 47 units in 2 states. We predominantly do short-term rentals, have begun to venture into sober living houses as well. I've got a new partner that has a management company that manages sober living houses. So we're branching out into that a little bit.
Gotcha. I want to talk about that for a minute. So you said 44, 47 doors,
47 total units.
47 total. And how many of those are short-term rental?
42 of them.
Oh gosh. So you're not in long-term rental at all.
No, nope. We were originally, and in 2016, we did a test on short-term rentals and just converted everything over. And that's what we've built our management business around is short-term rentals. So we're sticking with it.
Man, that seems so brave in today's world.
I was at it in 2016. So
yeah, so you got you caught the upwind.
yeah, and I mean the profitability now is way better than it was in 2016. So now, we had fun in 21 and 22, but 23, 24 is what was normal before all that.
Yeah.
So
Well, that's great, man. That's great. And do you actively manage those short-term rentals or no?
I have a team. Yeah, we have a property management company. So we have people both in Phoenix and in Boise and people overseas as well that manage that process.
Okay. But you own the management company, like it's
Yes.
considered in-house property management.
Yes, correct.
Got it.
Yeah.
Got it. So let's talk about vision for a minute, and then we're going to go back. I want to talk about the sober living model because you and I share some similarities there in some of the properties that we have. But vision, 2 years, 3 years, 4 years, somewhere down the road, where are you headed?
So my
acquiring, what's that look like?
Yeah, my 3-year goal is to get to the 90 unit mark. And originally when I set that goal, it was all short-term rentals, but I'm open to that being sober living mixed in there. 90 units. When we came back from Brazil, we were at 15 units. This was in 2021. And I piddled around for a while. I wrote a book because I didn't have anything to do. And then I decided, I gotta get to work. So I decided I'm going to double my portfolio. I gave myself 3 years. We went from 15 units to 30 units in about a year and a half. We got there and I was like, okay, now we're going to triple it to 90. So we're about halfway through the process of getting to 90 units. So that's what's coming next.
Gotcha. Give me a rundown of your team, if you don't mind, real quick.
Yeah.
So with 47 and mostly short-term rentals, what's your team look like?
So I just hired my first full-time COO. And so that was a big investment on our part, a big move for us. So she's number 11, team member number 11, counting me on our team. So the makeup is we've got her. We've got I have a business partner that also helps in property acquisitions, very part-time. Then I have 3 employees in Mexico that are virtual. We call them guest experience directors, and one of them is my assistant as well. We have a CPA in the Philippines, and then we have a caretaker, like a handyman, in both Boise and in Phoenix. And then we have an in-house designer as well, that when we buy a new property, she decides how we're going to rehab it, decorate the interior, the exterior, and make it pretty. So
gotcha. Okay. So one handyman per chunk of houses. And is your portfolio split 50-50? You have about 20 to 25 in Boise?
Close. Yeah, we have 17 in Boise and the rest are in Phoenix.
Okay. And so do your cleaning crews report the maintenance issues? I guess maybe the guest may report maintenance issues. How's that triage look?
They're supposed to. Sometimes they do. So we have aside from our caretakers, we have cleaning companies that we've contracted with rather than hiring our own cleaners. In both cities. So the idea is they're the first ones in the property. They're supposed to report broken furniture or damage or whatever, and we can either go back to the guest to try to recover that or address it ourselves.
The handyman that's local and is the one that's going to go there and handle that, taking care of the property. Gotcha. Yeah. Okay, let's talk about sober living before we wrap up. Oh, and I want to go back and talk about the book too before we finish.
Sure.
So let's talk about sober living. Your partner is who brought that idea to you. What made you think about that asset class, if you will?
I gave 16 years of my life to really serve others, and so that's a big part of who I am. And the real estate was just a retirement vehicle, right? And then when real estate became my full-time thing, there was a piece missing for me in terms of how can I use this to improve the world? And yes, of course, I want people to have a good vacation and relax with their family and that kind of stuff. But it wasn't enough to really push that button for me. And so when he came to me, he's like, I really want to expand my portfolio. I don't have any cash. what ideas do you have? And I was like, well, we need to build an investor pool, and let's raise some money and let's go build a bunch of these. And so that was just spitballing way back when, I mean, a year ago maybe. And now we're literally just a few days away from producing the pitch deck on that, and we're going to go buy 5 more of those in Boise, Idaho.
So how did you come up with sober living?
That's what his business has been for the last 11 years or something like
Okay.
that. So he was doing co-living.
Who
And
is this partner?
his name is Ryan York. He's a friend of mine from even childhood, and
Is
we
he in
just
GoBundance?
no, he's not, but he should be. um, and when I wrote my book, I hadn't spoken to him for probably 15 years. And when my book came out, he reached out to me and said, "Hey, let's talk, let's reconnect." So we did. So that's where we're at.
So this is opening up a can of worms, which is exactly the reason that I enjoy these conversations.
Wow.
And I want to point that out for the listeners, right? Because I didn't know that our conversation would lead to where it's
Right.
about to lead.
Yeah, we didn't talk about this. Right.
We didn't know this, right? And so this is exactly what I said at the front of the call. I don't know what I want. I only want what I know. And so I've got to have new conversations with people so that I can be exposed, right? This, that, and the other. I launched my first co-living house a year ago.
Oh, wow. Okay.
And it was an assisted living that we purchased.
Okay.
It was about a 5,000 square foot house. We added
Oh,
a
wow.
1,000 square foot on. It's 11 bedrooms, 12 bathrooms, and then it had 18 apartments attached to it.
Wow.
So we bought the property for the 18 apartments, and then we inherited the house.
Okay.
In fact, last week, the episode that I launched was with Sam Waggart. Do you know Sam in
Yep,
GoBundance?
I do, pretty well. Yeah.
So connected with Sam, learned all about co-living, and that's who taught me and mentored me in terms of what I needed to do to launch the big house, as we call it, at that particular property. So it's been a year. It's gone exceptionally well. I love the mission behind it in terms of affordable housing.
Yes. Right.
It's
Right.
such a great solution. And those people, the residents that live there, have found such a great sense of community.
That's so good.
None of those people knew each other before they moved in. Now they're celebrating Christmas together. They're going out together on the weekends. I've got 21-year-olds and 77-year-olds, white, black, men, women. All of these people, it's such a diverse group of people in this house, and they're all friends. They all engage with each other. And so it's been so awesome to see. And it is motivating me to do more of them, right? So that's what I was going to share with you in terms of something similar that I do that you're doing. So tell me the switch or the transition between co-living to sober living and what that's like.
So you could even say that our sober living houses are co-living houses, because it's the exact same model, with the only difference being there are rules that we have that maybe a co-living house wouldn't have. Absolutely no alcohol, no drugs. You cannot come home drunk. You can't have overnight guests. So not only are they submitting to an environment, but there's also a rehabilitation program that we're running at the same time. So our intent is to help guys and we have one. Well, my partner has 5 of these already. We're partnering together to add 5 more. We have our first one that's already in the process. It'll probably be 4 men's houses and 1 women's house. So I'll say guys. So most of these guys are coming from drug court, where it's being mandated by a judge, or they're coming from some Medicare program where Medicare will cover it if they're sober. And I don't know all the nuances of all that. Or it's coming from a parole officer, or it's coming from just somebody checking in, like, hey, I got to get control of the situation. And so everybody that comes in, it's not just affordable housing. It is affordable housing. I mean, the base rate is $595 a month. I mean, you can't find that anywhere. And so these guys are able to get a minimum job and be able to afford their rent and still have some other stuff that they can save or spend or whatever they want. But every person is put on a track where we actually want them to move out at some point. We want them to get their own place. We want them to get a great, solid, stable job. We want them to have credit, or they want rental history with us, right? Where they call and ask for a reference, paid on time, was here for a year, et cetera. So just to help these guys who are making a very important decision to improve their lives, give them a chance to really take that next
Now,
step.
are you guys the owner of the sober living business? Do you create the track, provide the accountability, the authority, and all those things?
Yeah, so my partner owns the management company, just like I own my short-term rental management company. He owns the management company, and our fund that we're putting together hires his management company to provide that process. So we're just going to slide right into his system.
So the fund is going to own the real estate and simply be a real estate play with a
Correct.
targeted customer.
Exactly right.
So
Yep.
will his management company, this is where the technicalities really matter and so key, and it will open up doors for me. And I'm saying that so that my listeners, right, can learn with me.
Sure.
Will the management company lease the whole house for a base rate and then the management company make the arbitrage that they charge
So
from the?
they're just going to charge us a percentage of rents. So that's baked into our numbers, and we're just going to cut them a check every month for a percentage of the gross rents collected. So we will collect the rents. The management company will collect the rents and just pay the the management company.
And so does that make you and the fund quasi in the business of sober living housing?
Um, my partner would know the details on that a little bit better than I do, and I've drilled him on this stuff, and he says that he already has 5 of these other buildings that are functioning basically the same way, to where he owns the real estate in one LLC, and that LLC contracts with the sober living program. So technically the sober living program is in the management company. The manager, we call him a regional manager, who's over all the houses, works for the management company. And so in a sense, we are basically just leasing the property, although we are collecting the revenue.
So let me ask one more clarifying question, and maybe that will help clarify it for me. If you were to rent this as a co-living house,
Mm-hmm.
you would have a gross rent pro forma.
Yes.
Are you going to hit that number or exceed that number by adding the sober living piece to it after you pay the management company their fee?
It's very close to the same. It's very
Okay.
close to the same. The management expenses are a little bit higher, but the revenue is a little bit higher as well. So we have some of our rooms are large rooms and they're double occupancy. So we're going to get, $1,200 per room, whereas co-living in Boise might be $995, right?
Yep.
So some of the rooms will make a little bit more, but our management's a little bit more too.
That's exactly what I wanted to know. So really you're doing co-living that's
Mhm.
niched down for
Exactly.
a target audience, and the upcharge in expenses for the niche is covered by the upcharge in the rent.
Exactly.
I love it. Tell me about, go ahead.
Another positive to this is we don't have to, we shouldn't actually buy in A neighborhoods, for example, right? We need to be in neighborhoods that are going to be comfortable with this, where we're not going to cause any friction. I mean, we're going to cause friction. It's just neighbors are neighbors,
Yeah.
but less friction, right? And so our cost of acquisition is a little bit lower, which makes it a little bit more attractive than if you're doing co-living and you're targeting, young professionals. You're going to want to be in a pretty nice area,
Sure.
pretty nice finishes and all that kind of stuff. Our situation, we can go a little bit cheaper.
Man, I love that. God, dog, I love it. I love it because that is not only targeting a certain group of people that need help,
Yeah,
but it is providing them with the help that I think is so important, which is the mental health, the
yeah,
financial, the financial coaching part of it, right?
right.
I saw a post somebody made this week that said something along the lines of, what's the one thing that if Americans had more of, this is my own words to their post. And I've already asked this question, which is why I'm able to frame it this way. What's the one thing that if more Americans had more of it, they would exponentially increase the level of happiness that they had? And it's mental health. And
Mm,
so then if you go to mental health, what's the one thing that if people had more of it would substantially improve mental health? It's cash flow.
mm,
Goes back to finances. People need out of the rut,
yeah,
right? They're so driven by the scarcity of their finances and getting by
right,
that they can't get out of the rut to get more sleep or better
right,
sleep, right? They can't eat better, right? They can't get off of caffeine and or drugs because they're always pressured.
right.
And so if we can provide financial education
Mm,
and workforce housing at an affordable rate to give them that break,
Yep.
When you combine both of those, right? Housing being the largest piece of somebody's expenses when it comes
Yep.
to budgeting. If
Yep.
we can fix that and provide the financial stability with connecting them in a job that they love, we could really do some good in the world.
Yeah. Yeah, for sure.
Tell me about the fund. Is this a regulated fund? Is this a joint venture fund? Tell me about that.
Yeah, it's going to be SEC. It's going to be filed with the SEC. So we're going to do the version. I can't remember all the IRS codes, but the version where some of the people don't have to be accredited. They have to understand what they're getting into and have to be sophisticated and all that kind of stuff. So we're launching that. The fund will probably open April 1st. And we'll hope to have all the funds raised in the month of April, and we'll go close in April, and then we'll do our first, our second purchase. We've already got one building that's ready to go into the fund, and it's getting leased up now. So we'll do our second purchase probably in May.
How much are you looking to raise?
We're going to raise 750,000 is our minimum, 1 million is our max, and so it's a relatively small fund, and that's what I told Ryan. I said let's do it one round, let's see how this all shakes out, then we'll have a case study that we can show, and we can do a bigger one next time.
So good. And then do you mind telling me what the payout is? Do you know what that is for the investors?
So this one is really a cash flow play. On the short-term rental, we're buying in nicer neighborhoods, so it's more of an appreciation play. So on this one, and I'm launching a short-term rental fund too this year, so a little bit of a busy year, but on the sober living fund, it's a cash flow play. So these things cash flow really well. They produce a lot more rent than a short-term rental does. A little bit more expensive because they're bigger houses, like but they produce really great cash flow. So the cash on cash return to a passive investor is going to be 9 to 11% starting in year number 2. Year number 1, we're stabilizing. It's not quite as high. And for investors that invest 100,000 or more, we're giving a 7% preferred return. So as long as the fund is performing, you're guaranteed a 7% return before any splits, and we're projecting a 10% return for the limited investors. Plus, we have forced appreciation and upside appreciation as we hold the property. So there's other benefits as well.
Man, I love it. I'm right there with you. We've been interviewing attorneys and figuring out prices and cost and how we're going to do all this. Is it going to be a debt fund or not? What's all that look like? How much did you pay in legal fees for that fund?
This was a sore subject for me at first. I went out and got quotes. My first quote was 25 grand. Now this was for both of my funds, right?
Okay.
So 25,000 for 2 funds. Then I got another quote for, it's going to be between 15 and 20. And then I just talked to an attorney. I guess it was yesterday. His quote was 5,000 for both. So, and that was a referral from a GoBro. So yeah, 5,000.
Yeah. Did you ask for that referral
I did.
Did I comment on that and tell you to talk to Dan Marklin?
Oh, maybe so. That's who gave me the referral.
Yeah. Yeah. Okay. I've met Dan in Arizona, not met Dan, but met Dan in Houston.
Okay.
And then we followed up, and I come to find out he found an attorney for $5 grand. So somebody asked, maybe it was you. The power of GoBundance is real.
Yeah. So thank you for connecting me.
Man, that's so good. All right, let's close up with your book. What was the book, and why did you write a book? What's the book, and how can people find out about the book?
So this is actually really perfect to come back to one of your earlier questions. Like, what's the formula for somebody out there who likes their job or is in their job and doesn't really have a way to get out and wants to figure out a way out? So this is it is a formula. So it's called the Hacker Method, the Unexpected Investor's Guide to Building Wealth Even on Limited Income. That was my story. So why did I buy? Well, first of all, the Hacker Method, hacker, HACKER, every letter stands for something else. So I'll go through that really quickly. But before I do that, when we decided to come back from Brazil, all of my staff, we had 100 people on staff. And when we're leaving, I was the CEO, it was a big deal. Everybody's like, oh, well, what's going to happen? So I'm sitting down with people that I cared about, and we're having the conversation, and they would always ask, well, what are you going to do next? And I didn't know how to answer the question because we were financially independent. I wasn't going to do anything, right? I was going to take some time off. I'm going to relax. But how is that possible unless you're robbing the nonprofit? How is that possible? So, yeah. And so I was having lunch with this one guy that I was really close with, a great friend. And, he was so stunned that he forgot all the social taboos around don't talk about money and all this kind of stuff. So he started asking me, well, how much do you have? You know, he just like outright asking. And he goes, how did you do this? And I explained, well, just like bit by bit, and I really don't know. I don't know how to explain it. And he goes, well, do you think I could do it? I was like, of course. If I could do it, 19-year-old kid didn't know what he was doing. You could do it. And he said, would you teach me? And that was like, I don't even know how to explain to you what I did because it was just in my own head. It was an evolution of things. And when I had that same conversation or similar conversation with a few other people, I was like, So for that first time that I didn't really have anything to do, I decided to write a book. And I sat down and I just tried to identify what are the steps that I took. Because you don't go from A to Z in a few weeks or a couple
Sure.
of years. There are phases, like you were saying. Okay, phase 1 was this, phase 2 was this. So I came up with what the process was, and I was like, okay, how can I explain this to people in a way that's going to make sense? And the bottom line is, earlier I said there's not some hack that's going to get you there, but my entire 29-year journey has been hacks that I've done to violate the consumer concepts that were taught from birth and become an investor, right? I'm not a consumer, I'm an investor. And so I hacked all of the things that like a house. Housing is typically, on average, 30% of someone's take-home pay goes to their housing. I paid zero. And I took that 30% that I would have paid for housing and I invested it. Vehicles. If people spend an average of 10% of their income, or 7% of their income, I think, on interest and payments on vehicles that they own, I pay zero, and I never will pay any. People pay an average of 3% of their income on credit card interest on vacations that they took last year and they're still paying for. I pay zero. So in the hacker method, hack is hack your lifestyle. Don't pay for housing. Don't pay for car payments. Don't pay credit card expenses. And there's a few others. Allocation budgeting. My prescription for people who want to build multi-million-dollar net worth, spend 50% of what you make, invest 40% of what you make, and give away 10% to make the world a better place. And people hear that 40%. I even had somebody say, hey, your book was really practical. That's nonsense. If you don't pay for your housing, if you don't pay car payments, and you don't pay credit card interest, the average American family, that's 40% of your income. Take that money and invest it, just like when we were talking about diamonds form under time and pressure. The hacker method, if you go to the asset allocation section, which is the letter A in hacker, it's 50% of your income goes to your living expenses, 40% of your income is invested, 10% is given away to make the world a better place. And people have commented that 40%, your book's really practical, but that 40%, that's ridiculous, it's unachievable. If we go back to the hacker section, hack section, hack our lifestyle, house hack, refuse to pay for your housing, refuse to pay car payments, and never pay credit card interest. Those 3 things alone for the average American family is 40% of your take-home pay. If you invest your 40% over long periods of time and insist on high returns on investment, so that's that idea of forming diamonds, right? Insist on high return on investment, you will become a multimillionaire. It's just a matter of time, even if you're making minimum wage. Did you know that if you make minimum wage for 40 years, from when you start at the age of 20 until 60 years old, you will produce $2.6 million in income? That's assuming we have a rate of inflation going up and all the math. $2.6 million. We don't have an income problem in the United States. We have a consumption problem in the United States.
That's so good. Man, I think we end it right there. That's so good. And I think that message should resonate with every one of the listeners that I intend for this podcast to reach. It's about getting ahead. And the only way that you can get ahead is if you swim upstream and go against the flow of the society. You've just got to. And most people make more than minimum wage too, by the way. So it's not a matter of not being possible. It's a matter of going against the flow and making different choices. So you preach into
if you make $50,000 a year starting today with inflation adjusted, I think I did the math. I think you're going to generate somewhere around $5.5 million in revenues in income over your working life.
And that's without leveraging debt on real estate. So when you
100%.
start to really take into consideration of debt, you've got a lot more buying power than that $5 million that you're talking about.
Absolutely.
Brian, this has been so awesome. If people want to get a copy of the book, find you, connect with you, how might they do that?
Yeah, so the book is everywhere you can buy a book online. So Amazon.com, BarnesandNoble.com, Target.com, Walmart.com, all those places you can pick that up. I actually have also launched a community helping people who are wanting to figure out how to kind of get out of the rat race, or as you've said, I'm happy with my job, but I want to build a multi-million-dollar net worth for my retirement. So it's called the Unexpected Investor Community, and I'm the first unexpected investor. And everybody else who's like, investor, that's somebody in a suit in Wall Street. Nonsense. No, that's somebody who just refuses to just consume their way through life, right? So we started a community that's at theunexpectedinvestor.com/community. Go check it out, and we would love to partner with you on your journey.
I love it, man. This has been awesome. Thank you for hanging in with me for a year.
Yeah.
Continuing to say yes while I work my own
perfect.
stuff out, man. This is great. I love it. Looking forward to more connections and Go Abundance.
Awesome, dude. Thank you so much for the opportunity. Great to be with you.
Awesome.